learn on the go, and stay informed. Our goal is to keep the average user informed and up to date with relevant tax information. For the entrepreneur and investor, getting acquainted with tax laws and regulations could be quite daunting. Well, not anymore. Introducing the KPMG Tax mobile app, where you can access all tax related news, laws, and insights in one place. Also, calculating personal income taxes has never been quicker. To get the app, simply search for KPMG Nigeria Tax on Google Play Store or iOS Store and install. Once installed, quickly do a one-time sign up on the application to access a constantly updated library of news, laws, and articles alongside easy-to-use tools. The KPMG Tax mobile app has a minimalist design, making it effortless to use and navigate. What's more, if you can't find what you need, asking a professional is as fast as it gets. Let's walk you through the application. The full menu is accessible from the left and helps you jump to any part of the application in seconds. Access fresh tax news by clicking on the news icon. The seamless scroll makes it simple to view all news at a glance. You have news you've already seen and want to go back to? Just search. Expand or share each news item to your friends with the dedicated buttons. Adjust your news preference easily from the settings icon and tailor your content. We have embedded tax legislation and popular cases in our tax laws section. Are you eager to know more about taxation in Nigeria? KPMG Tax app has more than enough for you. Stay on the cutting edge of industry updates with insights features. The new app brings together alerts, newsletters, articles, and publications from industry-leading KPMG professionals. You don't have to worry about missing important regulatory dates and other notable events. The notable date feature brings them all into one place in a calendar or list, however you want to view them. For the average employee, entrepreneur, or business person, KPMG Tax app has another important feature, the PIT calculator. Plug and play, simple as it gets. Input the required numbers and calculate your taxes. Also, the app has jokes and valuable tips. Check in to learn something new and fun. Still feel there's more to know? We've got your back. Ask an expert and get quick, insightful responses from KPMG professionals when in doubt. Learn more from various authorities through recommended links in the external links tab. Read all about us to find out more about KPMG's service offerings, our responsible tax principles, and disclaimer. It's now a breeze to connect with us online. Just click on the link icon on the homepage to get to us on social media. KPMG Talks app, connecting with you on the go.
Good morning to our distinguished guests. You're welcome to our July edition of the KPMG Tax Chat. We're excited to have you in our midst this morning. The topic for today is expatriate taxation and managing the mines. So we are really excited to take this discussion forward with you because at this point in time, it's very obvious that global mobility solutions will be a very topical issue. And taxation is an attendant issue that comes out of global mobility. So expatriates are really under a lot of scrutiny in terms of compliance from the immigration perspective, from the taxation perspective. In the same way, the federal government has also sort of reduced allocations to states. So states are definitely looking for means of generating their internally generated revenue. So it's very important that compliance is at its peak during this period. I'm very excited to introduce Uzo Obienu. He's an Associate Director in Tax, Regulatory and People Services, and he'll be taking the discussion forward. My name is Elizabeth Olahere. I'm a Senior Manager in Tax, Regulatory and People Services. So in terms of housekeeping, the key housekeeping rules we have is that your questions and answers, you can drop them in the Q&A chat box. And then we'll be taking a poll at 11 o'clock just to test the tempo in the house. And then we'll be concluding by noon. So if you have any questions, feel free to drop it in the Q&A box. So I'll be introducing Uzo, or passing the baton on to Uzo at this point. Thank you. Uzo,
Good
over to
morning,
you.
everyone. My name is Uzo Obienu. I'm a tax associate director with KPMG here in Nigeria. Over the years, I've had the privilege of heading our personal income tax practice, essentially looking at what we do around state audits, especially with regards to state audits in particular. So I've headed that unit earlier in my career, and have maintained some form of oversight over that unit till date. I've spent about 14 years in KPMG, and it's a privilege for me to be here today to discuss the topic of expatriate taxation. You may ask why expatriate taxation at this time. Lizzie has provided a bit of background in terms of the fact that allocation has been on the decline. Allocation from the federation account to states has been on the decline over the past few years. And when you hear states say we want to shore up our IGR, what comes to mind readily is taxation. And when you hear taxation, then you think about expatriate taxation because of the amount that is involved, and also because of the technicalities that it will typically involve. So it's a right time for us, the right time for us to have this conversation, to look at what we need to know about expatriate taxation. Where do we need to be careful? And generally arm ourselves with the right knowledge as far as this area of compliance is concerned. And also explore, are there planning opportunities that are available to companies as far as expatriate taxation is concerned. So that's what we're going to be discussing today, and I'm happy and excited to be here, and I'm looking forward to taking your questions, even as we discuss this topic today. Thank you.
Thank you very much, Uzo. That was a very insightful introduction. So without further ado, I think we can dig into the meat on the bone. We have quite a few guests on the call, and I'm sure they're all itching to hear what we have to discuss on this matter. So I think a good way to start the conversation is a particular question on just the general overview. So somebody's trying to find out exactly how does expatriate taxation work in Nigeria? Under what framework is expatriates taxed in Nigeria?
Okay. Thank you, and I think it's fitting to start from that question. So to start with, we have what we call the Personal Income Tax Act, as amended 2011. So the general legislation that guides taxation of individuals, of partnerships, of trusts is the Personal Income Tax Act. Now, the Personal Income Tax Act also has subsidiary legislations that, and one of them is the Payee Regulation. The Payee Regulation defines how employment income will be taxed and provides some guidance as to when and how employment income should be collected. Now, what's important to note for expatriates is that expatriates, unlike Nigerians, are only subject to tax with income that is derived from Nigeria or deemed to be derived from Nigeria. Now, for expatriates that are under employment, they will come under the Payee Regulation. And the Payee Regulation places the collection burden on the employer of such expatriate. So for the purpose of that tax, the government assigns the employees as collection agents for the payee. The payee means pay as you earn taxes, which is your employment tax that is deducted from your income on a monthly basis. So the expectation is that the employer of such an expatriate will be the one to deduct taxes from the expatriate and remit same to the state or the federal government in the case of expatriates that live and in Abuja. Now, it's also important to note that taxation of expatriate, similar to the taxation of non-expatriates, is really determined by where the expatriate is resident. So if an expatriate is resident in Lagos, such an expatriate will pay taxes to the Lagos State Internal Revenue Services. Similarly, if such an expatriate is resident in Abuja, the taxes due will go to the Federal Inland Revenue Services. So it's guided by the Personal Income Tax Act in general, but for employment income will come under the payee regulation like I have mentioned. I'm sure we'll get to other details in the course of the conversation. Over to you, Lizzie.
Thank you, Uzo. Thanks for eloquently trying to distinguish between payee and personal income tax, because I think that is one key area, since we're talking about mines, I think that's one key mine that has sort of eluded some, or can be seen as a myth in terms of the difference between personal income tax and payee. So it's very good that you try to distinguish that. And the key differentiation is to understand that payee tax is just an advance of your personal income tax, and it's based on your employment income. So if, for instance, expatriates earn other income apart from their employment income, it's very important for the expatriate employee and the employer of the expatriate to sort of know, what sort of other income the expatriate is earning, so that they're also remitting the taxes. Although the key responsibility of the employer is on the employment income, but that doesn't absolve the expatriate employee of other income that are earned, such as, for instance, rent and other income that you earn apart from your employment income. So I think it's very good that you distinguish that, and it's a very important mine that expatriates need to decipher in terms of their compliance.
Yes, it's to the extent that such income is derived from Nigeria, be it employment income or income from other sources like rent or any form of investment in Nigeria. The expatriate is required to pay taxes on such income. The tax we're talking about here is the personal income tax.
Correct.
And like you rightly mentioned, the payee is just an advance, because at the end of the year, the expatriate is still required to file a return. Correct. Just like every other individual in Nigeria. You are required to file a return that states your income, that states your the taxes you have paid at the end of the year. So, but in terms of employment income, this is really where a lot of expatriates in Nigeria are found. And, they are mostly taxable under their employment income, because most of them are just, employees of companies. The relevant regulation would be the payee regulation, which it's really the responsibility, which appoints the employer as the agent of collection. So the responsibility to deduct and remit, as far as employment income is concerned, rests solely with the employer.
Okay, I think that takes us to the next question. It's kind of linked. It's actually a bridging question to what we've just discussed. And the key element for discussion is, are expatriates liable to tax on foreign sourced income?
Okay, so the point to note here is, for expatriates, you're looking at derivation. Where is the income derived from? Where is the income derived from? I'm saying this because it's important for us to distinguish between payment and income derivation. So if I derive income from Nigeria, but income is but the payment is made to Cayman, made to US, is made to UK. It does not change the fact that the income is derived from Nigeria. This is one of the minds that I really like us to take note of, because it's very funny. From my experience, I hear things like, well, that portion is not in Nigeria, but is it derived from Nigeria? So if the expatriate derives income from Nigeria, it is taxable in Nigeria. Now, it does not matter where and how such a payment is made. I like to say this again, it does not matter how and where such payment is made. To the extent that the income is derived from Nigeria, it is taxable in Nigeria. Think about it this way. If we want to follow the payment line, which I have heard that argument a number of times, then the locals can as well have their payments made outside of Nigeria. And to that extent, say that it is not my Nigerian income and then it shouldn't be taxed. But derivation is what guides the taxation of expatriate income. To the extent that it is derived in Nigeria, it's taxable in Nigeria, regardless of how and where such amount is paid. This needs to be very clear.
Okay, thanks, Uzo. That was abundantly clear. I liked your reiterations. It looks like you've definitely handled a lot of these issues during tax audits or reconciliation with clients.
Yes.
So I think that point has been noted to a large extent. One other mine that is important for us to discuss is the issues surrounding taxation of expatriates and employers' response to documentation. I think that's been one of the key challenges that has bedeviled the taxation of expatriates in Nigeria, in terms of the documentation, creating a synergy between departments and companies as to, the status of an expatriate, how much transparency, transparency around how much the expatriate earns, and then just documentation to support that. So I think this is one of the critical issues that we should be discussing this morning.
Yeah.
And, yes, our guest would definitely like to hear your insight, as somebody has posed that question, that what are the major minds around the taxation of expatriates in Nigeria, particularly with respect to documentation and cohesion between departments and companies. For instance, the HR department, there might be a separate department managing the immigration quota, so what are the major minds, and of course, what can we learn from today and how to get those minds off, landmines off?
Okay, this is very, very critical. This is at the heart of today's conversation. From my experience, what typically happens is that there's a need on field, some expertise is required. And the operation guys say, oh, we need an expatriate. In some instances, they even speak to the HQ and everything is arranged. They know the expatriate that is coming into Nigeria. All the conversation has happened. And then when it is time for such an expatriate to get into the country, oh, HR, by the way, someone is coming into Nigeria. We will need some documentation to enable him work. HR is not fully aware of how long is this guy going to stay. Okay, is he coming in for 1 week? Is it a meeting? Is it a very detailed project? So HR needs to get this guy into the country. HR speaks to in some instances, immigration consultant or the logistics guy and said, oh, we need to have our expatriates in the country next week or in 2 weeks' time. And they run around, oh, we have a quota position. Okay, why don't we arrange this and before you know it, the guy is in Nigeria. There is no due diligence around what exactly is he coming into Nigeria to do, and then to determine what is the best form of immigration documentation that this expatriate will require to come into Nigeria. So the problem first starts from the way the expatriate comes into Nigeria. So this expatriate, maybe he's just in here for a meeting. Let's even start, he came in, he's supposed to be here for a meeting, but the details are not very clear. And you put that expatriate on a quota position. By that singular action of putting him on a quota position, that expatriate is liable to tax in Nigeria by that singular action. Okay, he was supposed to come in on a temporary work permit, maybe do 1 week or 1 month or 1.5 months, and he got into a quota. Still the same response. He's liable to tax in Nigeria. And then perhaps he could have come in on a temporary work permit, which then makes the argument, okay, there is a chance that he may not be liable to tax if he fulfills some 3 conditions that we'll talk about in the course of this conversation. And then the next thing that you will also find in companies is that from there, the guy works the first month, the second month, and then the tax people or the finance people get to hear that, oh, by the way, we have expatriates in Nigeria, and I'm not sure we have started paying taxes for these individuals. The next thing is, where are they? What is happening? And before you know it, hurriedly, some payments are calculated and payments are made, and we create all manner of problems by not having a plan around the expatriates as they come into Nigeria. I think where to start this conversation is that when you're going to have expatriates work in Nigeria, it's a project. Let me make this clear. It's a project. From the day the need is conceived to say that, look, we will need expatriates in Nigeria. That is where to start that project planning from. In my experience, I have seen a number of companies part with significant cash in the form of liability, all because there was no planning around their expatriate employees. You cannot do the ad hoc thing when expatriates are involved. You need to take your time to plan that process properly. That process starts from that need. Once that need arises, there are key people that need to be involved in the conversation. You need to have your HR resources, human resources involved. You need to have your tax people involved. You need to have your logistic people or the immigration agent or consultant, and then of course the operations people that have generated the need. Now, what is important in that meeting is that you are asking yourself, this expatriate that is coming into Nigeria, what and how long do we expect him? What is he going to be doing in Nigeria to start with? Because what he's going to do in Nigeria will inform the kind of immigration documentation that is required. Like I said, if it is a business visa, it doesn't create a tax presence for that employee in Nigeria. If it is a temporary work permit, yes, it's possible that it could create a tax presence for the expatriate. It's also possible that it may not create a taxable presence for the employee in Nigeria. But if it's an expatriate, it's going to occupy a quota position. At that point, you already know that this expatriate is going to be liable to tax in Nigeria. Because one of the documents that you would submit when you are putting an expatriate on a quota position is an employment letter by the Nigerian entity, unless where such an expatriate is just accompanying a spouse. So an expatriate that is coming in to work in Nigeria, you would have submitted an employment letter, which by virtue of that employment letter alone, that expatriate is already liable to tax in Nigeria. So it should be clear from the beginning what you are getting into. And I cannot overemphasize the need for proper documentation. Carelessness cannot be tolerated when you're talking about expatriates because the penalty is huge. In my experience, I have been involved in a significant number of audits, and I have seen companies packed with up to ₦1 billion in liabilities because of what they could have avoided from the beginning. That's why this topic is very important to me. It's something that you can avoid if you take time to plan, if you take time to put the necessary steps in place. For serious companies have a procedural manual that guides their expatriate employment. Because it's not just a compliance thing, there's compliance on one side, there's a business risk that it portends when you do not handle it properly. I have seen the tax authorities seal up companies. And I can tell you, if they seal up 10 companies, the issues of expatriate taxation will, you will have at least 5, in fact, 7 of such companies having expatriate taxation related issues. Now, when an expatriate comes into Nigeria, you then ask yourself, you have the opportunity to also get some things right. But it's surprising that some companies still don't get it right. You find a case where somebody has worked in Port Harcourt for 10 months, 11 months, and the taxes are still remitted in Lagos. And you wonder, how did this happen? But right there in the immigration returns that you submit on a monthly basis, and it's important to stress that these returns are submitted at the end of the month. So you already know where the expatriate has worked in the period. You will find that there are errors and inconsistencies in a number of cases that I've had the privilege to work on. So documentation is at the heart of expatriate taxation. If you're going to bring in expatriates, let me tell you, you are getting into a project and you need to tell yourself that I need to manage this project. I need to take all the necessary steps that you will have in a typical project. There's a planning phase. There is the execution phase. So you keep your eyes on the movement of those expatriates. There are cases where someone has left the country 2 years, 3 years, no deletion slip. He wasn't deleted. And to that extent, you have left it open for the tax authorities to keep, talking about that expatriate. There is no documentation to show that this individual has left. Sometimes expatriates even come into Nigeria and the local office does not have a full view of the income of the expatriate. And so when it's time for audit, you hear things like, we don't know, it's paid out of France, it's paid out of Switzerland. We just get a back charge for a total number of things that have been done for us. And then you begin to run around. And it becomes already very difficult, very, very messy at that time. Look, expatriate taxation, it's a project. You need to have the right team. You need to think about the right documentation. You need to think about the possible issues that could be created, not just from immigration, but also from the tax authorities. You need to have a view of what is the income of this expatriate in Nigeria. What are the benefits that I am going to make available for the expatriates to enjoy in Nigeria? I will spend a little more time, hopefully, talking about this issue as we answer the question, but it's a project. Documentation is at the heart of it. It is not something that we do, haphazardly and leave it to a few people. One person is doing something here and the others are oblivious of what is happening in that unit. There is no secrecy about this. It's so important that it can disrupt business operations. So it's serious, it's important. In fact, the conversation should be elevated beyond officers. If you're a manager, you need to get involved. You need to understand what is happening there, because it can cause big problems for you. So let me pause here, and I hope that we get opportunity to dig in a bit more, even as we go on in the conversation. Over to you, Lizzie. If you're talking, you're mute.
Yes, I've unmuted. You've come with a lot of you've come with a very potent message this morning. A very, very, very strong message. And I think you've really been clear. It's obvious that taxation of expatriates is something that it should be at the forefront of any organization, because the taxes, as you've said from your experience and my experience as well, the taxes that could emanate from an audit, and when I say taxes, I mean additional taxes that could be avoided had the company had the right processes, a roadmap, and had proper planning around the taxation of the expatriates, potential exposures may be reduced to the barest minimum and, if possible, eliminated. So you've made that valid point that it's very important that companies plan and take this as a project. Your message is loud and clear, and I'm sure a lot of our attendees are taking note of that. One thing that is clear is that there has to be a deliberate and proactive measure in terms of monitoring the planning, monitoring the implementation of the records, the taxation of the expatriates, and just generally keeping records to ensure that the taxation of expatriates in Nigeria is as seamless as possible. I'm sure a lot of companies wonder if it's possible, but I'm sure it's possible to get there if there's a lot of deliberate planning and proactive documentation. So that there's a, as you were speaking, there were quite a few questions that came up in relation to what we're discussing. So Oluwatoyin was asking, this is Oluwatoyin, she was asking, please confirm, Oluwatoyin Olatunji is asking that, please confirm my understanding that once an expat is on STR, then his worldwide income is chargeable to PIT in Nigeria.
Okay, no, so let me backtrack and say for expatriates, we did say that it's only to the extent that the income is derived from Nigeria. Now, when you say worldwide income, and then STR is subject to regularization visa, like I said, they're for those that are occupying quota positions, right? It's deemed that you hold a Nigerian employment, okay? For those that are coming in on temporary work permits, it's there are conditions under which, tough conditions though, but there are conditions under which you may not be liable to tax in Nigeria. And then if you're coming in on a business visa, definitely the chances are very, very, very slim that you'll be liable to tax in Nigeria. When you talk about worldwide income for even those that are liable to taxation in Nigeria, it has to be the employment income. If the duties of his employment is exercised in Nigeria, so you're working out of Nigeria and a portion of your income is paid in the US, that income, for all intents and purposes, it was derived from Nigeria. And so you'll be subject to tax on both the Nigerian component and the one that is paid in the US. However, if you derive income from other sources, from other things that you do as an expatriate outside of Nigeria, remember the word is what? Derive. If you derive income outside of Nigeria, such income, maybe you have property in the US, you have bonds and shares and treasury bills and all that, that such income will not be liable to tax in Nigeria. It's not derived in Nigeria. For expatriates, derivation is the key. If it is derived in Nigeria and paid in another location, it doesn't change the fact that it is derived in Nigeria. I hope that addresses that question. So if I've addressed that question, you can just say yes in the comment box so that we're clear.
Okay, thanks, Uzo. We have quite a few questions pouring in. So we have another question from Rakesh, and he's saying that, do we have to declare the income earned outside Nigeria and kept outside Nigeria in Nigerian tax returns?
It boils down to the same conversation. that income that is kept outside, is it earned outside Nigeria? If the income is earned outside Nigeria, it is not, to the extent that you're an expatriate, it's different from Nigerians, right? Who are tax resident here. You are liable on your global income, it's different. But for expatriates, that income, to the extent that you earned it outside the country, it does not concern Nigeria. It's ring-fenced completely from what is liable to tax in Nigeria. I think it's very closely related to the question I took earlier. Derivation is the key point, right? Yeah.
Okay, thanks, Uzo. Another question that has emanated is deemed income rate supported by the law? Deemed income rates for expatriates.
This is a very interesting conversation. Supported by the law strictly, yes. I will say yes. But you need to understand what the law says about deemed income. Deemed income is in somewhere in Section 7 of the Personal Income Tax Act, and it started from saying that where it appears to the tax authority that so and so, he now talked about whether they are unable to determine the revenue, the income of as individuals and all that. You know, it wasn't just talking about expatriates, we're talking about everybody in general. That where the tax authority, that's what I want to say, is the tax authority, not a tax officer that you just had an arrangement with. So many years back, in fact, tax authorities used to publish rates to say that the way they used to do it then, they would define your nationality, they would define the level. So top management, mid management, technicians, they would say something like Americans, Europeans, things like that. They just define nationality, and then they will assign figures. They will publish deemed income for such individuals. Where the tax authority is the one that published the deemed income, you can work with the deemed income. Now, I'm saying this cautiously because what I have found in my experience is that individual officers of certain offices work with companies and they agree some amount between them. And then the liability and everything is published, and then you make the payments. There is nothing that you can fall back to say, and this is deemed rates published by the state. To the best of my knowledge, the last deemed income rates published by any state was around 2014. I think Delta State, either 2014 or 2015. So it's been a very long time since we saw deemed rates published by states. But when they were still publishing deemed rates, yes, it's from the states. And so if there were issues around not being able to agree income and all that, and both parties are willing, they could go the deemed rate route. But it will, for me, it's not the preferred route. And it is no longer popular. Like I said earlier, what you find is where one officer has told you that, okay, we're going to take this rate, they're going to take, that officer can deny you at any time and say, well, I never said so. And then you find that once you have agreed to say 10 million naira or $100,000 this year, by the next time they're looking at it with that same officer, he could, in fact, in the same audit, he could move it to 150. Because there is no firm agreement, there is nothing official, there's no official communication from that state in terms of deemed rates and deemed income for the expatriates. So it's a slippery slope. I typically will not advise clients to go that route. You are safest with your actual income because you don't have two versions of the truth. It's the truth, it remains the truth. You have the documents and it's the fact and it doesn't change. But once you go the deemed, this deemed in quotes, because like I said, it's been a long time since we had official deemed rates. It's not too different from even what happens, that used to happen with the taxation of non-resident companies. with the FIRS. It's the same basis where they're unable to really establish income and all that and everything. So the FIRS adopted 20% at that time. And in fact, it was even codified in one of the pronouncements, budget pronouncements, much earlier. So they are similar. There is basis in the law for taxation based on a deemed turnover. So it's in the law, but it's been a long time, and we have to be careful what we call deemed income. Don't go agree anything with any officer and think that that is deemed income. It will come back to haunt you.
Okay, thanks, Uzo. I think one thing that is clear is that at least when you go on the actual, there's this high level of certainty. You know, when you go on a deemed basis, there's still a level of, you know, if this gets reopened, but there should be a high level of certainty if somebody should ask, if someone plays the devil's advocate and says that I have closed an audit based on deemed and then I got my clearance, you know. So if I'm playing devil's advocate and I say I've closed my audit based on a clearance that I've gotten that particular audit has been closed, then why can't we rest the issue then?
Okay, it depends. Again, I'll come back to what kind of deemed are we talking about. If you're talking about the deemed of the old, so there's a very old audit that I have closed based on deemed rates published by the state. I will stand my ground on it. I have closed that audit, and I have closed it based on the deemed rates published by the state.
Exactly.
Now, where you have closed the audit based on some deemed in quotes kind of figures, you leave, you can't sleep with your two eyes closed, because you knew that from the beginning, or you didn't know that from the beginning you were not doing the right thing. So to that extent, that period could be revisited. Absolutely. But at the same time, even with the revisitation, we have to, be a bit bolder. There's a recent judgment by the TAT that the South-South TAT, on Citibank versus the River State Board of Internal Revenue. And part of what the prayers was that, look, this has closed. If you want to reopen it, you cannot just declare an investigation. You need to prove and let me know what this fraud, willful default is, and then we can talk about the reopening. And the TAT granted that prayer and said that, look, you cannot just feel like reopening because it's been closed. But from the company's perspective, why don't we get it right from the beginning? That's why we're here. That's why we're sharing knowledge. And that's why we're saying, please know what is deemed. Don't agree something with somebody and say it's deemed rate. It's not deemed rate. It's you, two of you exercising discretion, and the officer may be exercising discretion that he or she never had. And they say you can't give what you don't have. So you have just been deceived into paying some amount and then moving on. But I mean, there's also basis for you to say, okay, let's know even why we're now opening this case. Taxpayers should be bolder and are indeed becoming bolder. But you need to be bold when you have done the right thing. When you have not done the right thing, it's not easy to be very bold.
So that was very clear. So another question from the question and answer is that in addition to your response, the tax authorities may come back in future to say they've discovered additional facts to suggest that the previously agreed deemed rate was far too small in comparison with the actual. I mean, it's all the same thing. To the extent that you haven't gone on the actual basis, the deemed would always be subject to variations. It would be subject to interpretation. So I think to sleep with both eyes closed and avoid those minds, if possible, it's better to go on the actual basis and just be as transparent as possible, just so you can close an issue and know that the complete facts have been presented. Because the other issue is the incidence of penalties and interest. At this point in time, where tax authorities the world over, not just Nigeria, are trying to generate revenue through taxation, penalties and interest is also a very important element of tax collection. While, I mean, there's opportunities for waivers, it's just better to proactively try to avoid those kind of incidences. All right, thank you for that comment. That was posted by EK.
Thank you, EK.
Okay, Adewale Quadri is asking, good morning. Please, if a company resides in Lagos and has expatriates working in a project at Rivers and the expatriate lives in Lagos, where is their tax going to be filed?
Interesting.
Wait, well, let me read this question again. So please, if a company resides in Lagos and have expatriates working in a project at Rivers and the expatriate lives in Lagos, where is their tax going to be filed?
Okay,
so you have these issues of the principal place of residence.
Yes, there's the issue of principal place of residence. But let's even start and be clear. And this is where, I'll answer your question, but this is really where that synergy between HR, logistics, and finance really comes in play. The chances are that your expatriates actually live and work out of those project sites and visit Nigeria, visit Lagos on their way out. Hardly would you find a situation where you have brought in expatriates and then you keep the expatriates in outside of where they're supposed to be exercising the duties of their employment. It's always very difficult. But in the unlikely event that the expatriates, like you said, reside in Lagos but work in PH or Rivers State, the law makes provision for you to define the residence based on the principal place. There's a principal residence, POR, principal place of residence, and that tries to check where is there a work site, is there a rig that you can readily attach to these particular expatriates. And in fact, in the amendment, it went further to talk about itinerant workers, people that work 20 days in any 3 months period within a calendar year in one state or the other. So the law also has the view that we may run into some kind of technicalities as to where does this guy really reside. You need to do your best to establish based on the principal place of residence, which really is saying is it closest to a particular work site? Like, is he on a platform? Is he on a rig? What can we, reasonably use to ascribe a residence to this individual? But if all that fails, because I've had this issue come up in audits, where there seem to be, well, I call it horse trading, or, oh, this guy belongs to Rivers State or he belongs to Delta State and all that. The idea is do your very best to determine his principal place of residence based on the things that you can attribute to him. If I have someone that is on a rig and he comes into Nigeria, the guy doesn't live in Nigeria. So he may come into Lagos, land in Lagos, because maybe there is no direct flight to his rig in Oara, in Delta State. So he comes into Lagos and then flies from Lagos to Oara and then walks there. And then when he's done and he's rotating out, he comes back to Lagos and then leaves from Lagos. I wouldn't say that he resides in Lagos. By virtue of the definition of using the principal place of residence, I would say that he is resident in Delta State. But where you have even made, this is important and I want you to listen because the tax authorities use this sometimes against companies that do not have the knowledge. Where you have, inadvertently made that payment to Lagos State, the tax authorities should do their set-off. As far as the first schedule, I think it's paragraph 11, subparagraph 10 is concerned. They should work out the set-off. What is important for you is that you have made the payment. But this is not to say that you can then when you're fully aware that somebody resides in Lagos, you now decide, because I'm from Anambra State, I will make the payment to Anambra. No. It's for these issues where there are technicalities around where has he really resided. He spends few days in Lagos, he spends few days in Rivers, he spends few days in Delta, and you are having those technicalities. Do your best to determine where he should be. Like I said, based on the rules around principal place of residence, but even where that fails, and we can easily put that individual under the definition of itinerant workers, which is that he spends any 20 days within a 3-month period in a year in any of these locations, then you will have basis in the law to have the tax authorities sort themselves out in the case where you have inadvertently paid to the wrong authority. Companies that are not aware of this have had to pay taxes twice. You do not have to pay taxes twice for these kind of funny and thorny situations. The law recognizes it and has made a way of escape for you. So you need to be aware and take advantage of that position. But do your best based on the principal place of residence definitions, because it then defines a number of things that you need to check and be sure that you have done your best to put him in the right place. I don't know if this is understood. Please, if you understand what I've said, the person that posed that question, please, can you indicate? And if you don't, let us know so that we can clarify a bit further.
Okay, all right, thank you, Uzo. So that way of escape, I think, is principally through the Joint Tax Board has also tried to implement this way of escape. It's just that I hope that way of escape is wide enough in practice for people to go through. Because
well, it is. To be honest, I've been involved in a number. I've been involved in a number, and it's even the tax board, joint tax is making it work. For those that manage expatriate audits in this, amongst our attendees, you will hear things like, give me proof of payment in the other location. Once you're able to do that in the course of an audit, you will notice that they will remove that individual for expatriates, especially with all the ones working in rigs and platforms that are scattered in the Niger Delta region. They will typically do. And I've seen this work in real life, so it's not theoretical at all.
I think it's one of the commendations that we can give to the Joint Tax Board. My only issue is sometimes the timing. While they've started trying to do that, sometimes the timing in terms of communication between, the relevant authorities. But I think they're trying to make it work. And in the space of the last couple of years, there's definitely been some rejuvenation with the Joint Tax Board in terms of trying to eliminate these issues where they come up. So it's very good that you pointed that out to our attendees.
But I must say that we should not abuse it. It shouldn't just then become a case of I don't want to stop, stress myself. Just pay it to no. Don't abuse it, because like Lizzie said, you too, you'll be involved in some of the letter draftings and all that. You don't want to take on that stress because it will work, but you will need to do some level of documentation to show that I've paid them and all that. There was one case that was a bit, Tony, that we had to get involved and got the JTB to get a ruling, because we needed, sometimes you need tax clearance, and you're having some of those issues because the payments have not come in directly and all. So you don't want to abuse this. Please, let's do the right thing. The whole idea of this conversation is so that we can do the right thing. But if we have inadvertently done the wrong thing, there is a way to mitigate exposures as far as that is concerned, right?
Okay, thanks, Uzo. So I think at this point, we can also take a question before we go to the poll at 11. The question is the issues surrounding residency of expatriates. So somebody wants to know what exactly are the conditions that will exempt, or if you look at it on the opposite side, that will trigger the tax residence for an expatriate in Nigeria.
Okay. So I'll refer us to Section 10 of the Personal Income Tax Act. So the Personal Income Tax Act as amended, Section 10 talks about 3 joint. So if the duties of your employment are fully or partly exercised in Nigeria, you are tax resident in Nigeria. Unless, let me take that again. If the duties of your employment are partly or fully exercised in Nigeria, you are tax resident in Nigeria and therefore liable to tax in Nigeria, unless these three conditions that I'm going to talk about are jointly met. That's a point to note. It's not or, they are jointly met. The first condition is that your income is not borne by, I'm trying to put this in a very simple language, it's not borne by a company in Nigeria. So I can't find your costs in a Nigerian company. Okay? The way the law puts it is that the profit or gains shall be derived if the duties of wholly or partly, so the first condition is that the duties are performed on the behalf of an employer who is in a country other than Nigeria. The employer is not in Nigeria for a period of 100, the employee is not in Nigeria for a period of 183 days. This includes holidays, this includes leave, includes everything. And then the last condition, so three conditions that you must meet, first of all. The first one, let me recap. The first condition is that the duties of your employment, you are performing it for an employer who is not in Nigeria. The import of this is that there is no Nigerian company where we can see your costs. Your cost is not in Nigeria. The second, not recharged to Nigeria. Let me put it again, not recharged, because what you find is that even though the salary is not paid by a Nigerian company, the salary is recharged along with some other maybe expenses or other things that the foreign company or the employment hub, if it's a big multinational, has incurred on behalf of that Nigerian entity, and it is recharged. If that happens, that employee is liable to tax in Nigeria because the Nigerian company is bearing that cost. Then we have the 183-day rule. A lot of people thought that this was the only condition, but it is not. And now, even the 183-day rule is not just pure 183 days. It includes your leave, it includes public holiday, whatever it is, that you do not spend 183 days within a calendar year or the year following. So we can run it concurrently and see, even if you didn't finish in this year, what about the next year, right? And then the next one is that your income, that employment income, is it liable to tax in the other country where you are? That employment income, is it liable to tax in the other country where you are? Part of what we try to do with the third condition is to say that, look, we will need to have a way that you don't have a case of double non-taxation. So you're not doing 183 day here, 183 day there, and then you're just at the center and you're here, you're not paying, here you're paying. And then it's also one of the conditions that we also, so globally, you want to ensure that everybody comes under the tax net in a way. So if you don't mind, I would like to extract this particular portion, that's the section 10, as we continue this conversation, and beam it on the screen, because it's something that we need to take one after the other. I'm mindful that there's a break by just about now, but after this break, I would like to extract this and put it on the screen so that we can continue our conversation from this section 10, because the section 10 on the screen right now is the old one. The third condition is not as it is on the screen. Okay.
Yes.
So right after this break, I'll put the right one and then we'll take it one after the other. This is very important because almost all the expatriates that come into Nigeria right now, 90% of them are liable to tax in Nigeria.
Absolutely, also, because you make a valid point in the sense that the updates to the Personal Income Tax Act through the 2011 amendments definitely seeks to introduce, additional, like the one you mentioned on the remuneration is not borne by a Nigerian entity or a fixed base in Nigeria. So once that, even if your employer is not Nigerian, but the expense of the cost of that expatriate is recharged to Nigeria. So the issue on the double tax treaty, I think that's the final one you would want us to discuss once we come back from
Yes.
the poll, because once Nigeria doesn't have a DTT with the country from which the expatriate is coming from, then that expatriate is automatically liable to tax in Nigeria. And if you look at our network of DTTs, we don't have that much. So it definitely broadened the scope of the taxability of expatriates in Nigeria.
Yes, and that's where I would like us to start from in once we come back from this poll, so that
Absolutely.
we look at each of those conditions, because we need to clear the fact that you can escape taxation quite easily. It's not just 183 days anymore. Okay.
Yeah. All right. So thank you very much, Uzo. The last 1 hour has been very engaging. Our attendees have also, I want to thank them for their time and for the interaction. They've also been very interactive with the topic. It's a very stimulating topic anyway, because of the amount of taxes that could potentially emanate from tax audits and investigation exercises. So I want to thank our attendees for participating very vividly. The next thing we want to do at this point is to take our poll, just to test the tempo of our attendees in the house. And there are 3 main ways of joining the poll. You can either pick it up from the link. A link should be dropped in the chat box. Or for those that are technology savvy, you can just scan the QR code on your left, or go to the browser and type in the email address, type in the website address, and then include the code 164382. The link has been dropped in the chat, so it's easily accessible by just clicking on that link, or alternatively just scanning the QR code on your phone. The poll is just 3 questions, but we'll be taking 1 question to just test and make sure that everybody has gotten on board. We have quite a lot of attendees today, and would really want to see a critical mass of people participate in the poll. Thank you. Okay, so we have a lot of tea drinkers in the house. At the moment, we have 72% in favor of tea and 27% in favor of coffee. It's clear that our tea lovers are taking the poll for this morning. Coffee at 29. We want more people to join so that we can sort of get a good understanding of our polls. We would like to have a large number so we can access our polls with more details. We have 55 people on. Would really encourage you to join the poll. You can easily just pick up the link from the chat box or just scan the code on your right. We're having more people, but we still expect a few more people to join, if you don't mind. Okay, so 70, we have more tea drinkers in the house. Tea is healthier anyway, so nothing on my coffee drinkers, but there's a lot of, awareness on health issues, green tea and all sorts of tea. There's also healthy decaffeinated coffee. But, if I was to take the poll, I'll probably be increasing this. Uzo, if you were joining this poll, what would you be on, the tea or the coffee? Hello?
Sorry, Lysias, try to unmute. Maybe I would have.
You were trying to grab a cup of coffee, I suspect.
Okay.
Is that what happened? Were you trying to grab a cup of tea?
I would have been on the coffee side actually.
So you're a coffee person. Okay, I know you're a late nighter, so that's fine. the coffee is synonymous with your lifestyle.
Just like
All
you.
right. No, I'm a tea person. I'm trying to keep my health optimal. So, I mean, coffee is also good, but I'm just a tea person because there's variety as well. Okay, so we have quite a few people on board now. Precious, could we launch the polls now? Thank you. So our first question is, does your organization have a compliance manual on payee tax and immigration compliance obligations for expatriate employees?
No. Okay.
So we seem to be having more responses with no. At the moment, it's about 55%. 45, ranging between 43 to 45% are saying yes. No is in the 60s range. Uzo, would you say this is taking you by surprise, or is this what you expected?
This is what I expected. In fact, I'm very impressed with the yes. I expected somewhere between 25 to 30%.
No, Uzo, I must tell you from my experience that a lot of companies are actually really learning fast about compliance and sort of, I know a company that actually has a roadmap of the process of how to, just implement immigration and tax protocols for their expatriates. Because once your fingers get burnt, as you mentioned, in a tax audit, you really don't want to go through that process again. It could be painful, right?
Yeah. I mean, if you don't take anything away from this 2-hour session, please take this away. Go back to your companies and ask, how do we put this in place? How do we have a roadmap and a manual that defines compliance and and the interdependencies between payee compliance for expatriates and the other units that are involved, and try to define what needs to be done. Put some timing around it, and the documentation checklist. Please, if this is the only thing we go away with, I would say that we would have done a significant part of what is required to stay compliant. This is a big mine.
Okay. So we have 60-40, 60 no, and then 40% yes. Kudos to the 40% that do have it. I'm sure you'll be reaping the rewards. And for 60%, of course, as Uzo has advised, it's a good idea to explore this possibility of getting a manual, a process roadmap, or anything just to ensure that there's some sort of system in place to avoid this kind of pitfalls, because they could be significant and deep. All right, so we can proceed to the next question. Which of the departments in your organization do you think is in the best position to handle expatriate related matters? Okay. Okay, naturally, human resources shot up first. I think maybe people hadn't seen the all of the above option. We had discussed that. And then at some point, all of the above started to tag behind human resources. But of course, most companies would have a natural posture or disposition to probably go with human resources, which is reflective here. And then it's clear that all of the above is also popular, but still not as popular as human resources. Finance and treasury at 7%, operations at 3%, risk and internal compliance at 2%. Human resources has half of our participants or attendees are saying that it should be domiciled with the HR department. So what were your expectations? And then maybe you can shed some light on what you've seen in practice. What do you think is the best practice?
Okay, what we have on the screen, human resources, taking the day as far as this question is concerned, it's very close to what we see in practice. But what I have found is that even within the human resource department, significant information is not available to them readily. But what I have also realized is where I have seen the highest compliance is where all of the above, especially risk and internal compliance, is involved in the conversation. For some of us, we call them the police of the organization. When they get involved, when the conversation is elevated up to the level of risk and internal compliance, it tells me how seriously that organization is taking that issue. Naturally, finance and treasury will be involved at some point because of the tax conversation. But usually what I see is that they are involved when a letter is received from the tax authority asking for an audit, or maybe at the point of payment of taxes. And that is really their involvement, very, very tangential involvement. But if you want to get it right, the message this morning has been that all of the above should be where we should all aim to be. We should aim to be at all of the above, working together and not working in silos, working together. I think where to start from is to realize that if there is an issue, it will affect all of us. Because sometimes I have also seen where someone says it's not my business. If it's a business risk issue, then it's your business. It's the business of your department. And everyone needs to be involved and ensure that this project is properly managed and that we do not get to the point where we're having issues. The operation guys are pushing and saying, where is this project? I need him to be on field X day, Y day. It's important that you also, reflect and say that there might be things that need to happen for us to have proper documentation to bring them in, and so that we can have a smooth run, even before and after they have exited the company. So all of the above is where we want to be. And I can see that a number of us have caught that message. Okay.
Okay, Uzo, it seems like your message, a lot of people share your sentiments, because all of the above, while it's not number one because of the traditional belief that HR, it's typically an HR thing, but the message of all of the above just demonstrates the synergy that is very important, if not necessary, for maintaining optimum tax characteristics of the payee for expatriates. So it's well noted, although it's dropping. So it seems like some people are still adamant that it should be with HR. So you have some work to do in the course of the next 1 hour.
Okay.
I think someone has had mercy on you. But your message, you might need some more convincing to do. But
Okay.
anyway, I think the message, I mean, it looks like it's now working a bit. So we'll see how it goes in the course of the next 40 to 45 minutes. I think your message is definitely making an impact. All of the above would definitely show that there's synergy between the relevant departments. Okay, thank you, participants. The next question is, how easy is it to get the documentation typically required by the tax authorities, i.e. expatriate contracts, pay slips, evidence of net salary paid, in order to confirm the annual income of an expatriate? Okay, so about 50, well, it's now 47% are saying that it's difficult. 20% are saying it's easy. Some are saying, interesting. About 20% are also saying it's very easy. And then we have 13% saying very difficult. So 48% tops the polls at difficult, easy at 21%, and very easy at 20. So very easy and easy sharing 20%. So the combination of very easy and easy, 40%, and then difficult at 48%, then very difficult at 13%. So what do you think about this? It's difficult to get documentation such as expatriate contracts, pay slips, evidence of net salary. It could be difficult indeed, even in my experience as well.
Yeah.
It could be difficult.
And it boils down to the planning conversation. Because if it's not planned, it will be difficult. Because sometimes what happens is that sometimes the expatriate has left the country at the time of the audit. And you are asking HQ about someone that was in Nigeria some years back, and it could be difficult. I do not underplay the fact that it could be difficult, because I have clients where they have an HR hub from where they send people across the globe, and sometimes trying to get details for an individual and all that could be difficult. But the question I would like to ask us is, do we think the documents exist? Please answer this question in the chat box. Do we think that this documentation that we're talking about, do they exist? Because the first thing is that if they exist, then just humor me and answer the question in the chat box. Do we think that the documentation that we have talked about in terms of expatriate contracts, pay slips, evidence of net salary paid, etc., do we think they exist? Okay. Yes. I'm seeing. Thank you for those of you that have taken time to respond. Yes, they do exist. So if they exist, then there are two things that are involved. Perhaps our communication, the people that we are relating with do not have access to them, one. And what it means is that we're not pitching the conversation at the right level. That conversation is not at the right level. I keep telling my clients when they having difficulties or they tell me they can't find this, they can't find that, I sympathize with the fact that some of them could be so old that you may not be able to find them easily. But if the documentation exists and you are planning well, an expatriate is coming or has just come into the country, and you say, by the way, I will want to have the details of XYZ. Because at the end of the day, most of them, the cost is recharged to Nigeria. So how do they know the cost that is recharged to the country? So I want to have XYZ because there's a likelihood that I may be reviewed or maybe audited at some point. In fact, even for statutory audit, sometimes, when you're trying to vouch your staff costs, there's the chance that they may run some tests that will require me to provide X, Y, Z, and then you plan it early. and then you are not asking for the information on the day of the audit or 1 week to the audit, it will be difficult to get it 1 week to the audit. But if you plan it at the time he's coming into Nigeria, it's easier to put those documents together and store them away. Like I said, it's a project. If you have a view of all the likely things that could happen on the project, then you plan for it. One of the likely things that will happen on this expatriate management project is that you will be audited. You will be audited, and audit will require you to provide some of these documents if you are being taxed on actual income. And that is the safest place to be. It's difficult if the conversation is not at the right level. It's difficult if you are having that conversation late in the day. You don't want to be having the conversation when he has exited the firm or your company, or you can't even find him. Or maybe you just took on immigration responsibilities, because it happens too. I've seen so many funny cases. It's not your employer, but you took on immigration responsibilities. So the tax authorities will ask of you the taxes due. So please, let's plan it early and make life less difficult for ourselves. This is already difficult on its own. To get the information is difficult. You will compound it if you're not talking amongst yourself and talking at the right level. And if you are making that request very late in the day, you will compound the difficulty of getting the required information for the audit. So that's my comment, Lizzie, on this question. And what's on the screen, it's real. That's the way it is. And I've not seen very easy, but I see difficult for a few people, easy, but more around difficult and sometimes even very difficult.
Okay, Uzo, I think your message is consistent throughout. You're the consistent town crier on proactive. I don't know if you're doing it for your own sake also, so that your work is easier, because honestly, I know what reconciliation could be without documentation. So life is way easier for all parties involved.
Lizzie, I've seen clients part with more than 1 billion twice.
And it seems like
for things that they could have avoided. I'm a
consultant. I would
be happy with an increase in fees rather than them paying that 1 billion for what they could have avoided.
Wow. I see therein lies your passion and your message, yes. The central theme of your message. I mean, obviously, it's an illusion to think that you'd be able to, optimize your tax position without documentation. So it's about striking that, because I've seen someone put in the comments that, yes, they exist. Some companies, especially family-owned businesses, they intentionally keep it secret. So there are some instances where expatriate salaries or remuneration is shrouded in secrecy. It's myth. So it's a balance. It's a decision that a company would need to take as to between weighing the scale of secrecy, and because that's why I made that point about why it could be escalated to higher levels in terms of managing expatriate taxation, because you can find a win-win situation because it's very understandable that expatriate salary should be protected because of also
everybody's salary, in fact. Yes,
exactly. But there could be that balance. There could be compromises that could be made to ensure that there's confidentiality with expatriates and even all staff salaries, and at the same time having that level of documentation to be able to support your audit. So I think it's it behoves on companies to be able to reach that balance between confidentiality, privacy, and documentation that would support your salaries and benefits, especially benefits when it comes to substantiating your claims with the tax authorities.
In fact, to support your last point, Lizzie, right? There are companies that will manage their entire expatriate and top management even from payroll to audits. So what they do is, once an expatriate is coming into Nigeria, this documentation is sent to us. Yes, there is the view that, well, we don't want all the information everywhere. So, but there must be somewhere where that information is housed. that is readily available to, for audits and for reviews. So we are their consultants. We have signed all manner of non-disclosure, and to be honest, those things are just mere figures to us because we see them every now and then. And so we are able to house the information securely under our data privacy rules, and such that the information is only available when it is needed by tax authorities for certain levels of defense of the figures that we have. So it's important, and we are not by any means underplaying the importance of privacy as far as compensation figures are concerned. And we understand that, yes, for expatriates, it's even more because of sometimes the share number, share quantum of the pay in there, and the fact that in some jurisdiction, you can't even share without recourse to the employee, right? I've heard that in some jurisdiction. So you have to already inform the HR before you even begin to have conversations that, look, perhaps this is covered in the policy, in whatever the employee signed at the time of his employment, that we can share this with the government. So it's important, but there are ways around it. And the only thing that we're trying to do is that the company is protected. That's all. We just want to be sure that the company is protected at the end of the day. That's why all of this is necessary. Okay.
And of course, the company's protection is also the protection of the employee. Okay, so Uzo, thank you very much. Thanks to our attendees for participating in the polls. We have reached cruise control on this tax chat, and we would be going on another altitude now. I think we should continue the conversation that we had started prior to the polls. So Uzo, over to you. We were talking about the basis for the taxation of expatriates. So we were talking, I think where we stopped was the additional conditions that were introduced to the Personal Income Tax Amendment Act in 2011, particularly with the double tax treaty. And then obviously you had also touched on the fact that even where the employer is not Nigerian or doesn't have a fixed base in Nigeria, to the extent that the costs are recharged. Yeah, so this is the amendment.
Yes.
And this one makes it even more difficult to, or rather this is more, it makes it more difficult to be exempt completely from tax in Nigeria, because the last condition, the remuneration of the employee is liable to tax in that other country under the provisions of the avoidance of a double tax treaty with that other country. So the question is, how many countries does Nigeria even have a double tax treaty with?
So that's the conversation that, sorry, can you hear me?
Yes, we can hear you.
Okay, so that's the conversation that I would like us to have, to say, look, 3 conditions. The last one, what was beamed earlier, did not have that last clause, because it is not just anybody. I will not exempt you from tax in Nigeria because your income has suffered tax in UK. Sorry, UK is a treaty country, in Azerbaijan or something like that. Just because your income has suffered tax in that country, it's possible that you will have a situation where the same income will suffer tax twice, depending on the laws of both countries. So for Nigeria, we are just concerned about our treaty partners, the countries that we have treaties with, the UKs of this world, the Netherlands, the Finland, we have South Africa, we have
Romania.
Yes.
Canada, about 14 countries. About 14 countries.
Yes, about 14 countries. I think 2 are waiting for ratification right now. As we go on the chat, we'll beam the countries as well, or we can paste it on the chat box, the countries that we have confirmed treaties that have gone through the ratification process. My colleague will paste that on the chat box so that we can see. Those are the countries where there might be a chance that, look, we will be able to have that treaty, we'll be able to avoid the possibility of double taxation. So you can see on the screen now, you can see Belgium, Canada, China, Republic, France, Korea. But you need to note the ones that we do not have. The 16 out of the 19 countries on the screen, we have double taxation signed already. So you can see them on the screen. Those are the countries. But if I may go back, please go back, yes. Please note that these conditions that we're talking about, the connecting word after the first Roman figure is what? And. Can you see it? The connecting word is and. So they are joint conditions. And now if you look at all of this, let's even start with the first one. The first one is that the Nigerian entity is not bearing the cost. The cost of the employment of the expatriate is not borne by a fixed base of the employer in Nigeria. So the guy is employed in assuming KPMG is a company. Let's use KPMG. KPMG is still a taxable person. Say KPMG US, and that cost is not borne by KPMG Nigeria, who could be deemed as a fixed base of KPMG US. That cost is not recharged. That cost is not used to settle intercompany receivables or payables. It's not used for intercompany settlement because it may not be very obvious that the cost is recharged. They didn't send you a direct bill, but they have used it along with other things to settle some amount due from you or due to you. You need to be careful. So it's not borne there. In how many instances do we see that? So that's one very tough condition. Then we come to 183-day rule. After the 183-day rule, and remember now the 183-day rule has included what? It has included annual leave and temporary period of absence. Okay, these ones were not there in the former Personal Income Tax Act. And then the last one, so you fulfill number one, number two. The last one is that, look, he needs to be from a treaty country. So if he is not from a treaty country, that's already one condition not met. And that means that he's already liable. If the duties of the employment are in any way, partly or wholly performed in Nigeria, he's already liable. And then remember where we started from. If you have put him already on a quota, you have assumed that he's taking on a Nigerian employment. Here we're talking about that, oh, maybe in the first instance, the employer is in US and all that, it's not in Nigeria, he just came in, he's spending 6 months, or he's spending 5 months, so he may have avoided number two. He's spending 5 months just to do some work and all that. That's what we're talking about. If you already hold a Nigerian employment, you're working in Nigeria now. So these conditions are very tough, and that's why we thought to beam them. They are very, very, very tough. And most likely you will find that that expatriate is liable to tax in Nigeria. And where you are in doubt, why don't you reach out and let's talk and see whether such an expatriate is liable to tax in Nigeria based on the facts that you have presented to us. We'll make a determination and we'll help and guide you in that regard. So I think we have dealt with this, and then we can move on to the next question. Lizzie, if you
yes, Uzo, thank you for that. That was very clear and insightful. We have some additional comments on some similar question from before. Somebody, Clement Okoro, is asking that most expats enjoy BIKs, benefits in kind, that are not part of their stated income. How can this problem be addressed?
Okay. It goes back to, you already know that when an expatriate is coming into Nigeria, there are certain things that you will have to provide for such an expatriate. It's very uncommon for an expatriate to come into Nigeria and expect them to find their own homes. You likely provide a home, you may provide a car, may provide domestic servant. There are quite a number of benefits that may be provided to an expatriate in Nigeria. Now, the rule around BIKs right now is that, look, you are liable to tax on anything that is provided by the employer that is not provided for work purposes. Apart from, reasonable removal expenses and, reimbursables and on non-assigned lunch vouchers and all that. No, those ones are different. But anything that, you get or you are entitled to or you enjoy by virtue of your employment, it's a very wide definition. So if you are living in that house because you are an employee of company X, it's a benefit to you. But if I am on a rig and there's accommodation on a rig, it's not a benefit to me because it is what I'm using to exercise the duties of my employment directly. All of us are talking today, I'm using a laptop. This laptop is not a BIK, it's not a benefit in kind to me. It's a tool of work for me. It's what I'm required to do my work with. So it's that distinction that you need to draw early. What am I going to make available for his enjoyment and comfort, for his entertainment, as it were? I'm going to have a house for him. I'm going to make available a car for him. And sometimes there are fine lines. I'm marketing director and I have a Hilux truck. Is this this a BIK to me? A Hilux truck I use to move products. I have samples of the product and I use it to move around and all that. Will you say that that's a benefit in kind to me? So sometimes there are fine lines. Companies have also decided to adopt non-assignable benefits that will, at least mitigate the risk of certain things being described as benefits. So this man is going to move around. I'm not going to give him a car. I'm going to have cars in the pool that will be available to pick him up in the morning and bring him to the office. I don't want to run the risk of maybe any mishap on the road. So I want my drivers in the office to do that. Will that driver be a benefit to such an expatriate? No, the answer is no. Will that car be a benefit? So a lot of benefits are enjoyed, all right, but the point is being able to draw the line to know what really is a benefit and what is not. The benefits could be so wide. I can't even, as I have given him a driver, I've given him a cook, I've given him a steward. I'm paying for the service fees or in the apartments. I'm paying children's school fees. I'm paying hardship allowance. All of those are benefits and you need to quantify them. You need to quantify them, but there are fine lines and sometimes you may want to interact and say, what exactly is this? And if you plan your expatriate project, as I call it, properly, you will be able to sit and ask yourself that, what can we do? Earlier I said there might be opportunities to mitigate. What can we do? What's important? The expatriate needs to move, right? So I'll make movement available. I will not make a car available. A car won't be part of his contract, but I will ensure that he can move. So when he needs to move, we'll pick a car in the office that takes him there. It's a pool car. It's not assigned to him. So there are also planning opportunities and some conversations that you can have around even the expatriate BIK itself to minimize your exposure, to manage your exposure, as it were, to taxes. But at the end of the day, you want to also be sure that the expatriate is paying his or her fair share of taxes, but nothing more. Thank you.
Thank you, Uzo. I think you've made it abundantly clear that in all instances, documentation is very important in supporting or proving otherwise an expatriate's income in Nigeria. So I think you have answered that question appropriately, Clement's question. Another question that is being asked is that, do expatriates have a tax filing obligation in Nigeria?
Yes, just like every other individual in Nigeria, expatriates have a filing obligation. And it's like if you were around when we started, the we did say that the payee is just an advanced payment of the personal income tax, which is what we are all liable to, both expatriates and residents, Nigerians. So we are all required to file our taxes at the end of the year. So I have completed 2020, right? My taxes will be due for 2020 in 2021, which is really looking back at 2020 to say, what have I done in 2020? By 30th of March, I am supposed to say, this is the income, because I've had the opportunity to now pull together my income. For the expatriate, it will be total income that he or she has derived from Nigeria, to say that, oh, this is the total income I have derived from Nigeria, and these are this is the tax due on the income. And then you can also attach the evidence of payment of the tax and file the return. What happens in most organizations, because I did say that for a lot of expatriates, the main income, or most of the time, in fact, the only income they have is actually the income from their employment. So you'll find that the organizations take on that responsibility and put together that form and all that. But in actual fact, the individual, even those of us that are working that are local Nigerians, we also have an obligation to say that you can add your under income, because there could be income that the organization is not aware of. And so you do your filing and say that in addition to my employment income, I also I sold Ashwebi at some point, and I made some profit and all that, and you put all of that together and then you file it. So it's the same laws that apply to Nigerians as far as the filing obligation is concerned also applies to expatriates. But the difference is, for Nigerians, it's your worldwide income, even where the income is exempt from tax. There's a difference. Where the income is exempt from tax, you will exempt it, but you will declare an exempt. But for the expatriates, for the income that is not derived in Nigeria, they stay with what is derived in Nigeria for the purpose of their filing in Nigeria.
Okay, Uzo, yeah. Thanks for that. Closely linked to that question is something similar, a follow-on question. That is, an employer allowed to pay personal income tax on behalf of expatriate employees?
Pay personal income tax. The question is, an individual is supposed to pay his taxes. So where someone offers to pay taxes for me, and that person is my employer, what the employer has done is he has increased my income. So now, if my income is 100 naira, tax due on that income is, say, 20 naira for the sake of argument, and the employer has offered to pay 20 naira. What the employer has actually done is to make my salary or my income 120. And so we need to calculate what is the tax due on 120. Now, if the employer now says, okay, really, I want to take the tax burden off the employee, then what needs to happen is that the employer needs to gross up that figure. His income will no longer be 100 naira. In fact, it will not be 120, but you will gross it up in such a way that after the calculation, what is then due to that employee will be 100 naira. Now, this is understandable because most of the times when expatriates come into the country, when they're being moved around the world, they do not know what the tax jurisdiction is in those places and the taxes that apply. So they will typically say, you know what, I am going to get X amount regardless. So it's now the onus is on the company to then look at and say, how do we make him good without paying, without running foul of the law? So you are not calculating the taxes and paying it. It's different from grossing up the figure, such that you will get the tax due and remit that to the government, while the employee gets the net amount. But it's important that we link this with the Finance Act. You know, the Finance Act clearly says that the taxes, taxes are borne on behalf of employee or vendor and all that, that you will not get that as a deduction from the company's income tax side of things. I hope I'm not digressing too much because I'm conscious that I don't have only finance people in this room. But when you're wearing that hat, that's why I said some planning is required. If HR goes ahead and just says, okay, I will pay your tax and all that, if that contract comes to the view of the Federal Inland Revenue Services, that portion of taxes paid for that employee will not be a deductible expense. So the right thing to do is to say, how much is he expecting? 100 naira. I gross up 100 naira, maybe I'll get somewhere around, I do the calculation and say, if I'm supposed to pay him 100 naira and I'm grossing up that figure, what will it be? Maybe around 124. So I will state his salary on his contract as 124. If you do that, then the entire 124 will be available to claim as a deductible expense on the staff cost side of things, while you will still meet your objective of giving him the 100 naira that is his net pay. So small little things here and there that can help the company as a whole. And like Lizzie rightly said, when you help the company, everybody that is involved will benefit from it. So you can pay, but you need to be strategic around the planning. Don't just say, I am making this payment. You will, take the figure, gross up the figure such that you can also take the deduction from the company's income tax side of things.
Thank you, Uzo. Yeah, thank you. It was very important actually that you mentioned the issue with the gross up clause in the Finance Act, because it's instructive to know that where the tax is not a tax deduction, meanwhile, it's under ordinary circumstances, it should be part of your staff cost. But if it's not part of your staff cost and then it's having to be disallowed for corporate income tax purposes, that could have significant effect on your tax from the corporate income side perspective. So Oludare is asking that, what if the gross up scenario is stated in the contract or condition of employment?
So in the contract, you've already said that the company will gross up and pay. And my question will be that, since you know that that's a potential area for debate and argument, why don't we just have it in such a way that it's just stated?
Absolutely.
Before it's stated, yeah. You can, especially if the expatriate is going to be on a quota in Nigeria, the Nigerian entity will issue an employment letter. What happens is that those employment letters typically don't even get to the expatriate, because the expatriate feels that, well, I'd rather stay with my global employment letter. But you can use that opportunity also to, redefine the pay in such a way that it's clear what you are doing, that his salary is not 100, his salary is 124, assuming that is the correct figure. But that and you can do the computation and attach it there and say tax is 24, 100 is the salary. You can put it as part of the document if that gives additional comfort to the employee, so that he understands that he's still getting his 100 naira. That's what is usually important to the employee. So if you go there stating that, oh, this one we're going to gross up for your tax, you're already beginning to create a scenario that will be a bit neither here nor there. Somebody can begin to argue that, well, that means that you're taking up that responsibility of the payment. The wordings of such gross up will need to be very clear that that is not payment. But if you do say that you're going to make the payment, what will happen is that you lose the benefits from a company's income tax side of things. And if you have a lot of expatriates, it could be big money. Just imagine the staff cost less 20%. It could be big money.
All right, Uzo, thank you for that. Peter is asking, this was in response to a conversation we were having about the Joint Tax Board and potential of elimination of taxes that you had paid to the wrong tax authority in error. So he was asking that, I want to ask if the situation you just described now refers to the State Inland Revenue as the tax authority or to the FIRS.
Well, it straddles both, because you could also have a situation where people living in Abuja are involved, and then that will already involve the FIRS. Or there's even an interesting situation of people working more than 12 nautical miles offshore Nigeria, because there are rules around the exclusive economic zones and all that, to say who has taxing rights to a certain degree outside of, at the coast. So it could involve FIRS, it could also involve states. The Joint Tax Board is umbrella body for all of them. So if there are issues that involve employees working out of the Abuja, then FIRS will be involved. But typically it will be states. But once there are employees in Abuja or who fall under the jurisdiction, excuse me, of the FIRS, then the FIRS will be involved. I don't know if that's clear. Please, can you just respond if that's clear? Else, you want us to explain further, you can let us know.
Okay. All right, somebody else is asking that where rent is paid, because we've answered on hypothetical taxes, where rent is paid for the expatriates, how much is taxed? We had talked about benefit in kinds for expatriates, and specifically where rent is paid for the expat, how much is taxed?
The tax is the tax on the figure of the rent. So I've paid for a house in Banana Island. Essentially, I provided that house to the expatriate. I provided that house to the expatriate. It's a benefit to him. So the benefit is the value of what I have provided. Now, it will be different if the sole purpose for that is just work. I have accommodation that is not living accommodation. I have accommodation, he goes to Onne to do some things and all that, and there's accommodation in Onne. That is not a benefit to him. Sometimes in the course of my work, I also go to Onne. I know the accommodation looks very much like living accommodation, but I'm only using that for the purpose of my work. That's not accommodation, even if I paid 1 billion there. If not, by now, I'll not have any form of salary, because we do travel and sometimes we use accommodation that is not necessarily classic hotels. Okay? Over to you, Lizzie. If you're talking, you're mute.
Okay, thanks, Uzo. How are pension contributions made by expats deductible from Nigerian payee tax?
Pension and expatriate. So I would like to assume if this could be, okay, let's take the two scenarios. So sometimes the expatriates make remittances to their home country. They continue their contributions and all that. For the purpose of Nigerian tax, it's an after-tax conversation. So your income is what it is. What you do with your income in terms of your contribution, it's your business. In Nigeria too, we have pension schemes in Nigeria. I need to state that expatriates, it's voluntary for them. They are not required by law to contribute to our pension schemes in Nigeria. So you don't want to force an expatriate. And from my experience, I hardly seen any expatriate that volunteered to contribute to taxes in Nigeria. So what you find most of the time is that they continue their contribution in their countries, their countries of origin, or where they primarily work. Say he's working in the US and he came temporarily to do something in Nigeria. And for the purpose of our taxes, that's not a valid deduction for Nigerian taxes.
Okay, thanks, Uzo. So will an expatriate invited, Maruf is asking this question, will an expatriate invited to train some employees for 3 months be liable to tax in Nigeria?
We'll start from his documentation. How did he come into Nigeria? First, if he habitually comes into the country and for some reason we have put him on quota, he's liable to tax in Nigeria. The more likely documentation for him would be a temporary work permit. So if he has come in for 3 months, what we need to then go back is to the section 10 that we reviewed the last time. You know, what in the first instance is his cost borne by the Nigerian entity. That's the fixed base, the company in Nigeria. The second instance is the 180. Obviously, he will escape that. And then the last condition will be, is he from a treaty country? So those conditions will play again here if that expatriate has spent just 3 months in Nigeria and he is working for that organization. He came in his training. I'm assuming that he's working for that company at that time. Because if not, that's not your responsibility anyway. The company that that seconded him to come to training for them will need to sort out his immigration and tax issues accordingly. So it's down to the conditions that we talked about.
Okay, thanks, Uzo. Dennis is asking that, please, is an expatriate payee calculation same as the regular payee computation, or is it different?
Okay, it's interesting. It's actually the same. I mean, the table is the same. But what you will find is that because of the amount that is involved for expatriates, you will find that most expatriates will be in the last band of that table. So you have 300,000, 300,000, 500,000. So it's in bands. The first 300,000, the second 300,000, the next 500,000, the next 500,000, and the next 1.6 million. You know, for Nigerians, in a number of companies, you will still find some people that occupy maybe like the first 3 bands and may not get into the 4th band. You may find some that will occupy the 4th band, may not get into the 5th band. You may find some that will occupy the 1st, 2nd, 3rd, and 4th band and only have a portion of their income in the last band. But for expatriates, the bulk of their income is in that last band, which is taxed at 24%. So it often will look like their own tax rate is different, but it's not. It's exactly the same table that we use for Nigerians that we use for expatriates. Exactly the same table.
Thanks, Uzo. I mean, I guess that question is coming from maybe when there's an audit and he sees how much expatriates are paying and he's wondering that because the law is the same thing. So it's not like there's a separate tax law for expatriates. It's just that obviously the more you earn, the more you pay. Okay. So Dennis is also asking, what qualifies a person to be a consultant that pays withholding tax in an organization?
Okay, this is a very it's a fine line actually. It's a fine line for me to say that you are because first of all there's what they call the manager concept that you want to look at. We often look at manager concept solely from contract employees, but really you look at it more holistically, even from the perspective of the people that you have and call contractors. So you want to be careful to say that the duties of this particular contract individual, let's use individual for now. What's the supervision level of the individual in terms of how he's managed out of the company? What is his reporting? That's why I say it's a very fine line, because sometimes it's just almost very similar and if you're not careful, it will be difficult for you to be able to prove that this one is a contractor and not an employee. The documentation is not the only thing. You start with the documentation. Yes, I have a contract that says that I'm a contractor. I mean, if you have a name, it's easy. I assume that you're not talking about someone that already has Uzo Obienu Enterprises or something. That's clear. You're talking. I assume you're talking about where Uzo Obienu is working in a company, and then he's a contractor in that organization as Uzo Obienu rather than as an employee of the company. And that's what I'm trying to answer. And like I said, it's very, very fine margins. Yes, the contracting is the best place to start, but you also need to look at how he is exercising the duties of the employment. And then ask yourself, what's really distinguishing this individual from the others that are employees? Because there's what we call substance over form as one of the ways we look at in taxation and even in general in law, that look, if the substance of all what is happening is that this guy is really an individual, is really an employee, but that all that we have done is that we have given him a contract so that a contract that is different from others, so that he earns, so that his tax is at 5% or maybe 5% or maybe 10%. Then the tax authorities can set aside that contract and look at how is the duty of his contract exercised within that organization. Okay, what are the things that he's ordinarily entitled to? You could start from there. See, who is a typical employee in this organization? And you want to compare this particular individual to that typical employee. You cannot be telling me there is a contractor and I'm seeing things like annual leave. Annual leave in your contract with him. It will be difficult to explain. You cannot be a contractor and I'm seeing things like HMO. I'm seeing some funny things, like for all intents and purposes, this guy is an employee of the company. So the document that you are presenting before the organization is not the only thing, it's just the starting point. The actual performance, is he a contractor in appearance and in reality? And if he is, you will know. You have vendors. Our vendors don't wear staff. They don't have staff ID card. They don't have days of leave. They don't have. So is he a vendor or is he an employee? And then if you're talking about contract staff, that's another conversation. When we have people come from another company and are working for us, because really from a payee perspective, nothing has changed. To the extent that they are under your management and your supervision, you're responsible for their taxes. What you do is to ensure that the vendor pays the taxes and then sends you the evidence so that in the event that you have a query from the tax authority, you can present. I hope I've answered that question.
Yes, Uzo. We should have seen some response from the attendee. If not, then you can ask, although we are running out of time now. Just a follow-on question from Bede with respect to training. So he's saying that with respect to the question on the expatriate that was brought in to train the staff of the company in Nigeria, I believe that the tax law exempts them from tax. So far as the purpose, I'm having some issues with, so far as the purpose of, Uzo, can you see that question? So far as the purpose of, okay, anyway, the general idea, I think, is the person is saying that with respect to expatriate tax being exempt, that he believes that since the person is coming in to do a training, that it should be exempt from tax.
Okay, so I think his reason is saying something about it for educational purposes.
Exactly. So, I mean,
okay.
The issues is he also needs to look at, whether it's for charitable activities and whether that activity is determined under the public character framework. So
Okay.
it's
And then the
important.
tax you're talking about, you want to be careful. Is it personal income tax or is it CIT for the company that is doing the training? Maybe we can, I will drop my email address for this person and we can have conversations for that. This is not very clear. You want to be very clear before you make that judgment that is exempt from tax.
Okay. All right. Uzo, thank you very much. We have quite a few questions we haven't been able to answer, but we are out of time now. We'll do well to respond to your questions via email. We're very grateful to our attendees and participants for the engaging 2 hours. It's been very interesting. I mean, Uzo has tried to demystify some of the myths around expatriate taxation. And of course, with your help, we're very grateful for your comments in the chat box, especially during the polls. It's also good to have insights, rather than us working in silos. It's good for us to understand what people are going through. So it has been a very insightful 2 hours. We're very grateful for the time spent, and we look forward to engaging with you. Twitter is not really active at the moment, but our tax app is still active. At least it's something that remains constant. So we're looking forward to engaging with you on our tax app and other social media platforms. We are active on all social media platforms that are available for use. So once again, Uzo, thank you for your time. I'll pass the baton on for you to conclude, and then we can wrap it up from there. Thank you.
Okay, I would like to say a very big thank you to all the participants and for giving us this opportunity to chat this morning stroke afternoon. And like Lizzie said, the conversation continues. I'll drop my email address shortly on the chat box, and I'll be very happy to hear from you and to hear that you are managing your activities better. Please, let's break the silo mentality that we see often in organizations, and remember that there's only one objective at the end of the day. We want to see the business grow. We want to see the business, compliant, and want to see things work out well in the organization. And if you have to do that, the message really is that we have to work together. We have to work together. We have to seek the knowledge like we are doing in this meeting today, and then try to work together to see that everything as far as taxation of expatriates, it's done correctly and done at the right time. So let's continue the conversation. My email address, I will share right away. Thank you very much, Lizzie, for having me.
Thank you, Uzo, and thank you to all our attendees. Have a great day ahead. Thank you.